Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that infinite sideways wedge on the Bitcoin chart. And guys, of course, we are just consolidating after that massive push on the BTC chart. And so this type of sideways action really is to be expected. Some altcoins have taken advantage of that. Others are starting to see a bit of a double top here and are starting to withdraw. But overall, we just remain indecisive inside of this wedge, and currently on a daily basis, we are holding the momentum that we need to hold in order to at least have a shot to take out this momentum pool and recover our volatility pivot to the upside. Now, the longer that we go sideways and down, as I've mentioned, we were pushing on our lows here. We did end up popping to the downside. And so if you saw the last TA video, I did suggest that this was a very dangerous formation of candles right here. And of course, we did get that, just a nice pop to the downside. Now we are getting a little bit of a mean reversion to the upside here. It looks like we may be able to target the 21 EMA or the 9 EMA perhaps once again, and then we can play it from ear by ear if we get into that area, because we might end up doing a squeeze to the upside between the 9 and the 21 EMA in this area of approximately 42,700. However, I wouldn't say that anything is confirmed there unless we get some solid, perhaps 4-hour closures above 42,874. Above there, we've recaptured our volatility pivot. And then we can say that our bias is to the upside, as we've taken out more or less 50% of this price action over here. And of course, we're looking at that on a closing basis. Now, where do we get much more confident? Well, if we do take out that liquidity, that fair value gap at 43,285, and then conquer 43,493, really we add momentum when we take out these wicks over here around 43,789. So that's the territory where we're going to be pushing on the upper side of this wedge again. And although I draw my wedges in a non-conventional way, they do work for me. And just remember that patterns don't matter, guys, okay? Only price action matters. And so that's why we're looking at the price action over here. And if you really want to show a strength of the move to the upside, well, we're going to have to take out 44,093. The reason is that this sideways action has just taken out the strength of the move that we had to the upside previously, and now we're going to have to prove ourselves again. That has had the consequence of pushing the bull zone up, and so now the bull zone is all the way at our highs around 45,000, when previously we could have probably reliably counted on a volatility push above 44,000. Now that's just going to be an indication of our strength, and really we're going to need to take out 45,000 before we can say too far that we're inside of the bull zone, or that bulls have firm control over the chart. In fact, we are fairly moderate right now in our stance, and anything under 42,000 is really going to look weak to me. We're going to be pushing on these lows again. We're going to have this EMA squeeze to the downside, and so I would really like to take out 43,000 as soon as possible, get a little bit back into the middle of this chart here, whereas currently we're still pressing on the lows. Now, I did set up some 4-hour plays last night, so congratulations if you got into that. We did have an idea for some type of mean reversion to the upside, as well as a potential breakdown. Now, what could that breakdown entail? Well, there is a liquidity arc down here. We probably have a bunch of stop losses under all of this price action that market makers would love to take out to the downside as we've pushed up here. We have a series of fair value gaps, and of course, we also have numerous lower time frame order blocks that could just provide us some support on our way down. Of course, we could just cut through this like a hot knife through butter, because we also have this potential bearish pattern here of this double top. That's neither here nor there until we take out the neckline somewhere around the bottom of that wedge, around that $41,000 area, and then we have a little bit of a buffer room on a wicks basis and some of these order blocks, of course, that could give us a nice bounce should we end up having some type of a fake out, which is pretty common in these type of wedge formations, no matter what they are, rising wedges, falling wedges, all of these things. And so sometimes we do get a fake out. And so any type of a dip to the downside, in the long run, I do see it as potentially a good buy, a good opportunity buy, assuming that this chart just continues to be bullish, which I do expect it to be coming into 2024 and throughout 2024. Now, of course, we're going to have some potentially deep pullbacks. Very typical on Bitcoin is something between 15 to 35% in terms of pullbacks. So we should expect some heavy pullbacks at some point. And, of course, the most common ones would be around 20 to 30%. Now, that's nothing to sneeze at. Your altcoins could just be decimated in a move like that. And so you do want to understand how you can protect yourself should we breach these lows. But, right now we're just doing that sideways crabbing. And, of course, Bitcoin will have to choose its direction eventually. And we're looking to get above essentially 44,000 to try to front run that, and underneath that 41,000 is kind of our front run to the downside, where we start positioning really for the downside there. Guys, that's your alpha for the day. Stay safe and happy trading.